Yeah, so they've been, of course, hiking rates, and they're really putting a big emphasis on things like wage negotiations, on oil prices as well. They're talking very much about some of the FX concerns here, and of course, this has always been something that's been on the radar for the Bank of Japan, just given so much of that usage of the yen as a funding currency and as a haven currency for the carry trade, but then otherwise in portfolios as well. Now they're talking about just how much of a concern that is for everyday Japanese citizens when it comes to that affordability. So those are kind of the economic standpoints and the market standpoints as well. They're also talking about, and Lizzy, you talked about this, having their bond buying program. And I think the context is important here because the Japanese invented QE and invented QT. They are basically kind of on the front foot of innovation when it comes to monetary policy. And that's something that the rest of the world has adopted because they were able to show that Japan and the BOJ was able to execute it well. But the fact that they're now having their bond buying program, it means that they're still doing it. It's still stimulative, but it's not as stimulative as before. They're still a ways away from, I think, quantitative tightening, which is kind of the conversation happening around not only the BOE, but of course the Federal Reserve as well. But for now, this is being taken as a very hawkish statement, a very hawkish decision, and paving the way for more rate hikes down the road.
The market reaction has been sort of varied, I think is one way of putting it. We're looking now at the yen 1.5% stronger. We did see it weaker earlier on as well. JGB yields, we're looking at the 10-year JGB up 5 basis points, the yield there to 1.05%. What's your reading of what that we're seeing in those moves?
So let's start with you mentioned JGBs. I'll start with the bond market there as well, because there was a key line where he was really just talking about what that upper limit might be. And he said that 0.5% is not a line in the sand. And that's crucial because so many of the analysts and economists were saying that's the line in the sand for JGBs that a lot of the folks, not only at the BOJ, but even at the Ministry of Finance, would actually respond to. And he's really throwing cold water on that, as any central bank governor would, that don't keep an eye on one particular level or the other. The FX story I thought was very interesting because now you are actually seeing strength in the yen off of the back of this report, even though during his initial comments and during the decision, to your point, there was no movement. I think it was around a 153, 152 handle. Now, I think the last time I checked, it was something like 150 handle in favor of the yen. Yeah. So this is, I think, interesting because it speaks this idea that what's going on in the dollar yen pair is not strictly connected to the BOJ. It's also a capital flow story because so many people, the market has been positioned as short yen on the basis of this kind of hesitancy that the BOJ would actually hike. It was a contrarian, non-consensus decision. And the fact that they have, you're now seeing that being unwound in a lot of ways. And that's what's happening in the FX trade.